All right. Thanks everyone for being here. With the question part, I don't have it on my phone, so if someone's able to bring me a phone at some point for Q&A and I can read off of that for the questions in the back, that would be great. Super excited. Oh, never mind. We got him right here. Great. Ray, so excited for this. Glad to be talking with you. I want to start with the news yesterday, and from a big picture perspective, because that's how you like to look at things. What happened yesterday with the midterm elections in the U.S. and there was a lot of pent-up uncertainty about it in the markets, as there always is. We saw the sell-off in October there and the bloodbath that ensued. How should people be thinking about the cyclical nature of these elections from a market's perspective?
Well, in terms of the market, can you hear me? Okay,
Yeah.
good. There was pretty much an expectation of what actually happened embedded in the markets, and the markets always respond to surprises. But from the bigger picture perspective, what we have in the United States or around the world is a clash of perspectives having to do with left and right and populism. Let's call it populism. And you could see a heat map of the United States where it's blue and where it's red. And that's split, and that's being carried around the world. And so I think the period of time that we're in is quite similar to 1937 in the following ways. There are cause-effect relationships. During the 2008 and 9 period, we had a debt crisis, and in that debt crisis, we hit zero in interest rates, in much the same as in 1929 to 1932, zero in interest rates. And then central banks needed to print money and buy a lot of financial assets because they couldn't produce credit. They could no longer lower interest rates.
We're going to fix your mic there. There we go.
Okay, thank you. And with that, with the combination of forces, those who had financial assets benefited a lot. The financial assets went up. Those who didn't benefit a lot. The bottom in the United States, the bottom 40% of the population could not raise $400 in the event of emergency. We have a wealth gap in which the top 1/10 of the population's net worth equals the bottom 90%, and a lot of people felt the system didn't work. And so you have populism there and populism around the world. So the election represented essentially that question, how we're going, that tilt would there be more of a tilt? Then we can get down to the particulars, of course, of that. Will the House go into the control of the Democrats? And when the House is in control of the Democrats, you're going to have more checks and balances, more inefficiencies. And then, but it's really just a setup for the next election. I mean, most importantly, because that'll be the presidential election and that'll be the mandate. And so we're now well into our cycle, our expansion cycle, which happens when the central bank stimulates and then asset prices go up and unemployment rates go down, and you're reaching limits to capacity utilization. You can't hire people, they worry about inflation. So then they put on the brakes, tightening monetary policy. And as they do that, the tightening of monetary policy brings a recession. And first it starts with financial assets, and then it passes through. When financial assets go down, people's collateral is less, lending is reduced, and then you go through another cycle of down cycle with central banks trying to be stimulative. So we have the question, as we're late in the cycle, will we have the downturn before the next presidential election or not? Because that'll have a big bearing on that question in terms of the left and the right. So
Yeah.
that's why the political situation. We're in a world now where politics and choices made have a much bigger effect on the markets. For example, the stock market went up a lot, largely because there was a corporate tax cut. If you own a stock or you own a company and they cut the taxes, that cash flow is worth more So you bid up the prices. So that's the nature of where we are.
Okay, so I want to stick with populism just for a second. You have a very interesting definition of populism as capitalism not working for the majority of people.
It's a driver, yes.
So why isn't it working right now? I mean, particularly in the U.S. Like, why are we seeing this rising tide? And even with yesterday, it doesn't feel like a full referendum on populism. I don't think it's going away. I mean, maybe you disagree, but why do we have that happening right now?
You mean why do we have the wealth disparity?
Yeah, the wealth
The wealth disparity is a combination of just so many things enter into it. Partially, it's related to technology replacing the middle class. Partially, it's related to globalization. In other words, there used to be a middle class that would produce things beyond the manufacturing line and so on. So it's a combination. Technology accounts for a little bit less when we do the attribution of about 60% of that. Partially it's because of the buying of the financial assets. Partially it's because those types of jobs have gone abroad. So it's the series of those things happening at the same time. Those are the forces behind it. Many of them are good for productivity because they raise living standards. There's also a problem in terms of education. In other words, give you an idea, in the top 35 countries, United States is 34th in childhood poverty, and there's an education problem that has to do with the way the Constitution is built. In other words, the Constitution decided that the state is the responsible for education, and quite often within the state, it's the tax district that you're in supports the education. So you'll see richer tax districts have very good public education, and the majority of them don't. So it creates a self-perpetuating problem. So there are a number of factors that account for the wealth and opportunity gap.
Got it. Okay. I want to ask you about China and read something you wrote back in March. You said, quote, "The Chinese approach to conflict is more like playing Go without direct attack, and the American approach is more like playing chess with direct attack." So as someone who has spent a lot of time in China, especially in the early formative years of their modern economy, how do you see this back and forth that we're seeing right now, this tit for tat between the U.S. and China? What's going on there? How should we think about it in terms of where it's leading?
Well, first of all, you have a rising power that is going to be challenging in many ways an existing power. So that's the big thing. And that'll have conflict in a number of ways. If you go through history, in the last 500 years, that's happened 16 times, and in 14 of those times 12 of those times there were wars, 4 of them there weren't. That doesn't mean there'll be a war, but you certainly are having the rivalry of great powers, with technology being at the edge of that. There's a different perspective that I was trying to convey. One of the leaders of China described it as follows. He said, "You in the United States, your unit that you value the most is the individual, and that individualism and so on. And so property rights and everything is around that. Like if you want to build a highway, you can't, and somebody owns property, that individual could stay in the way of getting that highway built." He said in China, the unit that matters is the family. In other words, the word country in China is state, family, two characters, one state, one family. He said, therefore, when we're running, it's more of a paternal attitude. In other words, how should we run our country? And with that, there is a clash of ways of operating, a big way. That is Neo-Confucian. In other words, it's the family. You can go 500 years before Christ was about when Confucius was. And so their approach is much more of does everybody know their place? How do you achieve harmony? How do you achieve negotiation? So negotiation is a way. It's like an exchange. You will treasure.
And you're a fan of tough negotiations.
I'm a fan of tough negotiations. So that's it. But when you're exchanging benefits and then you say, this thing's really important to me, and how do we deal with that? That's a negotiation. And it can be a tough negotiation. But when you start war, it's they use trade war. By war, I mean you say, I will hurt you unless you give in. And then somebody else replies, I will hurt you unless you give in. And then you start an exchange of hurts to each other. In other words, and then you create a dynamic which builds a life of its own for various reasons. For example, if you're a company now in China and you think about that issue and they think of the possibility that maybe supply lines, maybe if you're in the United States, you would say, if there's some possibility of conflict, I want to take my critical production and move it into the United States. Or I don't want them to buy tech companies. I don't want them to do that because that will undermine our tech competition. It could be, I don't want Chinese students to study in our best universities. It could be, and the Chinese could also worry, I don't want to put my capital in the United States because I could get it sanctioned. And if my capital is sanctioned, I don't know how I'm going to get it back. And it builds a dynamic that has a life of its own. And that's more or less what the path that we're going through. I hope that we will deal with it in the first path, like a good negotiation. But
can we unwind it though? At the point we're
no, I
at
don't.
now?
You're beyond the unwinding that dynamic. It's been basically the equivalent of, there's, I don't know, the United States or the Trump administration has shown the sword and said, okay, and that's changed the dynamic in which those things could happen. In other words, if I'm not satisfying, maybe I get sanctions, maybe I get other things, and then I have to deal with the possibility, if you're Chinese, of the possibility that that could happen. And just the knowing and the dealing with it causes a retrenchment or a type of behavior that in and of itself builds a life in which the United States then says, oh, they're preparing for war and defensive. You get a dynamic going. We're not going to go back to the way it was. I'm not saying it should be the way it was, by the way. There's a tough negotiation, and then there's also the threatening. In any case, we certainly are in a world now where that issue will be an issue, right? How China and the United States deal with each other about a number of issues, that will certainly be the case. So that's also like the late 30s. Late 30s, 1937, 1932, they printed a lot of money, asset prices went up, the economy rebounded, it was strong. And in 1937, they began to tighten monetary policy because the economy was so strong and inflation was coming back, and that caused the next recession. I think that when we look at the world, there is that risk of a downturn for tightening of monetary policy. There certainly is polarity in the form of populism in all countries. It means more extremism at both sides. And it means that if you have an economic downturn, there is probably going to be a lot more tension. In other words, when times are at the best, there's less conflict. When things go down, there is more conflict both within countries and between countries. So I worry about that. And we certainly have, for the first time in the post-World War II period, a country that is a comparable size to the United States and a comparable power. China's a comparable size economy, and so we will certainly have that rivalry.
Got it. Okay. I want to get to a couple questions here. So here, of course, here's one about the next financial crisis. You said a couple months ago that we're in the seventh inning of that, getting to the next crisis. And this person says, you mentioned that it's coming in 1 to 3 years. How would you advise everyone to prepare for it?
Well, the first thing I'd say is, in the markets, there's a saying, he who lives by the crystal ball is bound to eat ground glass. So I want to say the forecast, I'm never precise.
But you got it right once. I mean.
But the cycles happen over and over again, and so you're on the tightening stage. And we are 9 years into an expansion, and we are having the tightness of monetary, all the classic cycles. Most probably, you'll see cracks start in the markets first, and then you would see that then pass to there. Now, I would be surprised if it was more than 3 years down the line, and it could be 1 or 2 years. And so, what would I say? I'd say, by and large, most importantly, is know how to balance your portfolio or your exposures. The cycle is that everybody wants everything to go up. Central banks want it to go up, wants not only the markets to go up, but they want economies to go up. They want people to go up, of course. So as a result of doing that, they produce a lot of credit because credit is buying power. And so we have a world now that's leveraged long. In other words, a lot of liquidity around right now, a lot of assets, okay? And then and so there's the current environment. And I would say that what you want to have is a diversification of your exposures. If you're holding a portfolio, think about the assets that do well during such times to diversify your portfolio. And if you're here thinking about raising money, I would say I would raise money, if you're an entrepreneur and so on, earlier rather than later.
Get it while you can.
Get it while you can.
Okay, so here's another good one. You have a very holistic view on the state of the world. What is the most pressing problem you see, and are you doing anything about it?
The most pressing power I see is the wealth, opportunity, polarity gap. I think that's the big source of conflict and so on. And then I do think this challenges of rising is an important thing. As for me, I do a lot that relates to philanthropic or social enterprise type of things. I particularly, there's a whole bunch of things that I do. I like microfinance. In other words, I think that the most important things are basic education. If you can give people good education, and you can give them a stable family environment, and you can give them a few bucks to get them going, like microfinance, I think that's almost everything that's needed most fundamentally. And so I support that in a number of ways, philanthropically and through social enterprise. But my impact, and all philanthropists' impact, is very, very small. I think that what it should be is that the leadership, whether it's in the United States or other places, should declare that as a national emergency. In other words, literally the opportunity gap in that issue, and to examine it carefully and find ways to invest in that in public-private partnerships. There are a number of things that can be done. I run across them all the time. There's such a waste in education. I could just give you an example.
Sure, yeah.
I live in Connecticut, and Connecticut is the richest state in the United States. And one part of it is very rich, and the rest is very poor. In that state, my wife is involved with trying to help with public education of the worst students in the worst areas. She had a study done to measure how many students are disengaged or disconnected. Disengaged means a student who attends school but doesn't participate. They don't study, they're just hanging out. And disconnected is they don't know where they are, they don't come to school. 22% of the high school students in Connecticut, the richest state, are one of those two students. So that's high school students. Those students are going to be on the street. The difference in a lifetime, if a student graduates high school or doesn't graduate high school, is about $1 million cost to the society, depending on whether they go. There are ways of getting them through high school and to be able to be there, various ways. The average cost of incarceration is between $80,000 and $120,000 a year. So that whole notion, it should be, I think, a national emergency with metrics attached to it, and together bringing in people who live in those neighborhoods, who understand things, to form a commission to have a big impact on the society as a whole. I could do my little bit, but my little bit is tiny by comparison to the size of the problem.
Yeah, a lot to unpack there. Here's another good one. What's your biggest advice you would give, if you could, to your 20-year-old self?
Know that the most important thing is how you deal with your not knowing, not anything that you know. In other words, most people think that what they know is the most valuable thing. No. The most valuable thing is how to deal with your not knowing.
And you talk about this in principles about starting with the assumption that you're wrong. and going from there.
That's right.
And the
To
power
take
of
it
that.
in. I might be wrong. And you think of a 20-year-old. A 20-year-old has not even begun the second phase of their life. And second phase, the work life, is a totally different thing than the school life. And so let's say the day you get out of school, you're one. Okay? You're one in that phase of your life. You got a lot to learn. And I would say I'm at the end of my second phase of my life, and I still know that the best thing for me to do continues to be, how do I deal with my not knowing? That is my greatest power, not whatever I know, even though I've accumulated a lot. So that would be adventurous, be audacious, but be humble. Okay, take it in. Don't assume you've got it right, because I think the greatest tragedy of mankind, as I was saying on the stage, the greatest tragedy of mankind is people who have opinions that are wrong, that they're attached to, that they don't stress test. So curiosity, take it in, and raise your probabilities of being right by being able to stress test yourself and take it in well.
All right, we're going to have to leave it there, Ray. Thanks so much. That was a great way to end it. Thank you, everyone.
Thank you.
Thank you.